Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Andy Schectman again. We spoke about a couple of months ago. Andy Schectman is the founder and president of Miles Franklin, a major U.S. precious metals dealer. Andy, welcome back. How are you?
Wonderful to be here. I'm great. I enjoyed our conversation last time and was very pleased to see you are asking me back on again. So thanks for having me. It's a pleasure.
You're welcome. And maybe we could start talking about the economy, not just in the US, but maybe around the world. We
Sure.
just saw news about FedEx that was quite negative. I think it's down $50 today on in the stock market. And I spoke about that this morning in my video, that's a sign that the economy is slowing down because there's less goods being shipped.
Yeah, absolutely. They're talking about a UPS strike. They're talking about a rail strike. I think you'll see that be a central focus moving forward. Less goods being shipped. We've gone through an extended period of time where less goods were being produced and now less goods are being shipped. Prices continue to rise on many of the things that we need. And I think that indeed, you know, when you talk about interest rates rising in an environment where asset prices have been so overextended, this is not a recipe for, certainly for a recovery. And it's not a recipe for a healthy or robust economy either. I think this is just the very beginning of more stories like this that I don't think are positive in any respect.
Yeah, and what about the dollar? Even though the dollar has been very strong against the euro, the pound, the yen, and even the yuan, it's gone back above 7. Looking at it fundamentally and longer term, it looks like a lot of countries are trying to move away from the dollar. Maybe you could talk a little bit about that and what your feeling is going
Yeah, that's a big one for me. I mean, look, it's strong relatively around the world. As Doug Casey puts it, it's the prettiest mare in the slaughterhouse, but yet it seems to be getting weaker and weaker and weaker here domestically as what it will buy you. And so in relation to the euro or the yen, the Canadian dollar or whatnot, yeah, it might be the strongest of the weak bunch, but I would argue the fundamentals or its real value here when you're trying to spend it here at home is ridiculous. I moved to Miami or to Delray Beach from Minnesota. I have 3 buddies coming in town in the middle of October to come to visit and to see a Vikings game, Minnesota Vikings game at the Miami Stadium. And the cheapest 4 tickets I can find were $200 a piece. You know, when you talk about inflation, it's everywhere. And I don't think that just because gasoline has come down a little bit here that it's really much of a respite. Quite to the contrary, it seems to be accelerating in many other aspects. Go out to dinner nowadays, don't even have a cocktail, and you're going to spend a couple $100 for a few people. The cost of things here in this country certainly are not commensurate with the strength that we see in the dollar index. I think it's kind of illusionary. But when we talk about my feeling in terms of where things are ultimately going, yeah, I mean, you've read my mind. I think that the dollar is in big trouble as we're seeing a coalition of countries that are banding together, and they're banding together not only against the dollar hegemony, the Western hegemony that's really been going on for a long time, the Western hegemony that's been going on for hundreds of years. I think you're seeing that kind of being the rallying cry and the weaponization of the dollar against the ruble, and the consequences that has certainly, I think, has sped up this entire process. But when you look at the plan that is being laid out by the BRICS nations and those nations on the Belt Road, you know, you're talking about a new currency system that's going to be pegged to commodities. They've come out and said that recently, a basket of currencies, but more closely tied to a basket of commodities such as gold and silver, hydrocarbons, grain, sugar, you name it. And I have felt all along that it'll be on the rails of the let's call it a beta test that has been successful now for 3 years on the Chinese digital yuan. I believe it will peg a new system, whatever that new system is. It will peg it, and they will pledge commodities as they're talking about. You know, the BRICS nations just came out arm in arm and said, "Hey, we're going to issue a new world reserve currency." And I truly do believe that it will be pegged to a basket of commodities, and on the back of the success of the Chinese digital yuan and the immutability of those commodities pegged to it. I think ultimately this is where the real problem lies. It's not with the Fed's futile attempt to raise interest rates. They're not really doing much of that whatsoever. They're not selling off their balance sheet like they said they would. Raising rates to 2.25% and maybe to 3% in the next Fed meeting is not getting tough in any respect on inflation, when that inflation is 3 times, by their own lying standards, the return on a 10-year treasury. And as John Williams would tell us from Shadow Stats, it's actually probably more like 6 or 7 times under the real rate of inflation. So I think the dollar's days are numbered, not only because of the weaponization of the dollar, the rallying cry for fighting back against this Western hegemony and the perceived hypocrisy, but also because I just think that the rest of the world is sick and tired of receiving inflated dollars and treasury returns that are real negative in you know, at least 6 or 7% real negative. So yeah, I'm not very bullish on the dollar. You know, Brent Johnson's milkshake theory has proven to be accurate until it's not. And when the dollar is dumped, I think it'll happen in a very rapid fashion.
Yeah, I think I heard, was it Warren Buffett? He said, when I was born, you know, up until now, the dollar has lost like 96% of its value. So yeah, the milkshake theory has been working right now, because I think there's it's starting. It's not just going to be the dollar that's going to lose a lot of value versus real assets, but it's going to be you know, the pound and the euro, and they're going ahead first because they're in the periphery. So I agree with you there. And the other thing as well, here in the UK, we had the major reserve currency maybe up until before World War II. And I think they had to devalue that after World War I from 488 to the dollar to 420. And then by the end of World War II and beginning of the 50s, the pound was devalued to 280. And then in 1967 to 240. And 50s, 60s, and 70s was an age of like you had rationing in the 50s, 60s, and 70s, inflation, because all those pounds were coming back, and there wasn't much demand for the pound anymore. So I think it's going to be the same thing for the dollar. The inflation will get even worse because there won't be as much demand. So just wanted to ask you, because last time we spoke about the big order you got from the Texas billionaire for silver and gold as well. Has she come back for more, and maybe you could talk a little bit about what's going on in the silver market?
Absolutely. No, she hasn't come back yet. We do expect her to come back here, probably not too far down the road. We're certainly still having conversations with her and whatnot. And just real quick, just to back up for 1 second to your point about the euro also. Look, you know, it's the euro and the dollar that are sanctioning Russia, and yet 85% of the world is still trading with Russia. And I think both currencies, whether it be the pound, the euro, or the dollar, all 3 currencies are involved in these sanctions. And you know, if I were the rest of the world, I would be leery to trust any of the 3, in the respect that, you know, we're the ones sanctioning them. We're the ones that they view as being hypocritical. And I think that the sanctioning of countries like Russia has had unintended consequences. So the rest of the world is coalescing against this type of behavior. So just to add to that point, I do agree with you very much. As far as silver is concerned, you know, what's happening right now on the exchanges is really kind of crazy. We've seen somewhere in the neighborhood of over 1,400 tons that have been taken off of the Comex market in terms of silver. Silver is just disappearing off the Comex in a rapid fashion. The open interest right now is 1,500% greater than the registered category. So you have a massive rehypothecation in what silver stocks are available to be delivered on the Comex. We're seeing metal being bled off the London Metals Exchange at a record pace, so much so that it's the lowest amount of silver in the LBMA vault since they started recording amounts of silver in the vault. There's less than, I believe, 10,000 tons of silver in the LBMA vaults that do not belong to the ETFs. Maybe even more startling than that is the long position on Comex by the commercial banks, something I've never seen before. The commercial banks are net long right now in silver, and they've hoodwinked the managed money into going net short. So when you see the massive drawdowns on the LBMA, the massive drawdowns on the Comex, where you're seeing in terms of gold drawdowns, look, a few weeks ago, 41% of all the gold kilo bars were drawn off the Comex in one day. About 175 million ounces were pulled off the Comex. And so, you're looking at a situation where the biggest money in the world is draining the Comex, is draining the LBMA. We've seen 100 million ounces backdoored in the last 4 months out of SLV by the authorized participants. And for the very first time I can remember, last I looked a few days ago, the commercial banks were long about 5,100 Comex contracts over 25 million ounces. So from the top down, not only is metal being drained from the Comexes, but you're seeing the most sophisticated investors in the world go net long in silver, which is something I haven't ever seen before. I think it portrays for much higher prices moving ahead, and probably tougher availability as the bars are being taken off of the exchange. Those bars are what actually makes the blanks that make the sovereign coins, which are getting harder to get too, especially since the Queen died, all of a sudden getting even harder to get.
Yeah, a lot of people wanting to buy coins with the Queen. Is that what it's about? Maybe
Yeah.
as numismatic or just.
Yeah, I think that's the idea, is that she won't be on any more of the coins. They're going to do King Charles moving forward. And so, excuse me, anything that has her likeness on it, the Maple Leaf, the Britannia, and the Kangaroo primarily, immediately went up in price. And when we sell out of current stock, getting them will be uneconomical, in my opinion. And as a result, everything else went up, the Krugerrand and the Philharmonic as an example, because everything else is getting hard to get. So let's buy those. Those go up too. This shows the micro fragility of the market. And when I mean micro, I have long felt that from a macro perspective, getting product will ultimately be very difficult in this industry, because Rick Rule talks about 0.5% allocation to precious metals across the entire financial matrix. So if that number changes to 2.5%, which coincidentally would only be the 40-year mean of the price or the allocation rather of metals to the U.S. portfolio, that's a 5-fold increase in demand when this industry can hardly handle the demand that we have right now. It will make getting product next to impossible. And I have felt for a very long time there will be this moment where people are awoken. Now, I could argue that there's been a much greater participation and awakening, if you will, from the mainstream into this industry, but it still represents but the pimple on the elephant's ass. And that's the truth. The big money has no idea about silver and gold yet. Maybe they're beginning to understand that there's something not right in the economy, but when they see their 401k collapse, when they see their equity portfolio collapse for whatever that reason may be that incites that or ignites that precipitous decline, they have to come out and notice precious metals. And when that moment happens, there's so much liquidity out there, there's so much money that's been created that it will just overwhelm this industry. But when we look at an event like the Queen dying, my perception of this shortage in supply is a macro perspective that comes when this big event happens and there's awakening. But when you see a micro perspective like the Queen dying, and like that, everything dries up, it should underscore the fragility of this industry. It is not It is not an industry that is immune to the supply chain problems that we talked about at the beginning of this discussion. Here in the United States, we have to compete with everyone globally now who is experiencing inflation and understanding what's happening to currencies. It used to be when everything was hunky-dory that we would be filled. I would have distributors call me and say, hey, can I just stage 20,000 Britannias and 50,000 Krugerrands and 100,000 Philharmonics in your warehouse? You can keep them there. We won't charge you for them. If you need them, they're yours. If not, we'll pay to have them shipped out. That's what it used to be. Now I have to buy stuff 3 months in advance, hedge it, and run logistics to get into my office. And I'm competing with, the people in the UK from the UK Mint. I'm competing with people in Australia for the Kangaroos. I'm competing with people in Austria for the Philharmonics. It never was that way. And you see an event like the Queen dying and bang, everything just rises. I think this market ultimately is going to be defined by the inability to source product, because it just is not, it is not a market that is flush with product. And, I get a lot of heat for this, but I want to be very clear that, yeah, there's been decent product for the last 3 years, but I will tell you, it is the most difficult part of my job is securing, continually rotating product in and out. It's getting harder and harder and harder. And when that moment comes where people are obviously awoken to precious metals as an alternative, instead of the people that you and I talk to every day who have been enlightened and awoken to this beforehand, who take for granted how easy it is to get it, I think for the other people who come late, even 30 seconds late, it'll be a different story. So yeah, it's an interesting time, and supply chain problems are certainly not immune to this industry.
Yeah, and do you think, so how big do you think the silver squeeze movement has been the last 18 months? I mean, it's made a little dent, but that is just a pimple on the...
That's right. I think it's made a little dent, and there's been an awareness, but I think the real dent will be made by the commercial banks squeezing the managed money. That to me is where the real dent will be made. And if you look at what happened on the London Metals Exchange in March with the nickel failure, this was, I believe, the wake-up call to the commercial banks, because when the nickel market failed and the LME invalidated this trade for the first time in 140 years of their exchange, and I think it really put a damper on the credibility of the LME. I think it woke up the commercial banks, and I think they're trying to get their house in order by incentivizing the managed money through cramming the price down in the beginning of March. The commercials did, and I think the managed money just said, "I've had it. We're out. It's 40-year high inflation, war everywhere, a war in the Ukraine, trouble everywhere. The economy's a mess, and yet the price is getting smashed. We're out." So not only did they sell their longs, which the commercial banks gladly gobbled up, they went short. And they're massively short. And who went long? The commercial banks. If you take the producer merchant category out of the commercial category, just the banks themselves are really long. If you add the producers and into the commercial category, which they are, they're still long about 5,100 contracts, over 25 million ounces. I can't ever remember seeing that. So you have the most well-funded, well-informed, sophisticated investors on the planet going net long, I believe, setting a bear trap for the managed money. And it has allowed them, the managed money shorting the price so low has allowed the commercials to cover their shorts. They're doing the dirty work for the commercial banks. The real squeeze will happen on the exchanges. And, I think the real squeeze would happen when this new Moscow exchange that is being bantered about comes about, because all they would have to do, this new Moscow exchange, who, when they came out and talked about it, they said, look, we want to issue an exchange that will fight the manipulation of the West, of the LME and the Comex. But they're not bitching for the last several years because they're the ones accumulating it. So they're using the West's own stupidity against them. The West is suppressing the price, and who's gobbling it all and having it all sent home? The East. This is classic misdirection. They're using the leverage of the West stupidity against us, and by accumulating all the commodities. But once they have everything in hand, then they'll want to set a real benchmark price. Well, that's the new Moscow exchange they're talking about. How would they blow everything up? How can they squeeze everything? Peg silver to $50 day one. That's your AM fix. Put gold at 3,000 day one. That's your AM fix. In Moscow, bang, everything will arbitrage straight over to the Moscow exchange, and it'll blow up the Western exchanges. So I think it's the silver squeeze certainly has awoken some people. Certainly it's made it tougher to get product, physical product. But I think the real price, unfortunately, is still set by the banks and by the Comex market. The paper market sets the price for the physical market. It is the ultimate tail wagging the dog. But I think that'll change. And we're seeing steps that are moving in that direction, whether it be the commercial banks going long and covering their shorts, whether it be the bleed down of massive stockpiles of metal off of all of the world exchanges, including the Shanghai Gold Exchange, including the ETFs, and or now the talk of a real exchange trying to set a real price. And these are the kind of things that will happen, I think, without any warning at all. Now, we see the warning. We can see the breadcrumbs. The question is, do you trust your gut and your intuition enough to take that plunge and to accumulate when, you know, prices haven't accentuated yet? Because by the time they really start to take off, I think you're too late. You have to get in when the prices are low, because you can see the big players are using price to misdirect. And if price were such a determinant, then why is the biggest money in the world draining the exchanges of metal? Why are they going long? Why are they taking possession? Why are they removing counterparty risk? It's because that's how you win. You win by buying low and selling high. You win by doing these maneuvers when everyone is blinded by the cover of putrid pricing. No one's looking over here as the positioning is happening by this most sophisticated money in the world. And once they're in, they'll let it run, just like the commercial banks are not net long. And if they do let it run, and if they don't short the rising price, it'll be something to behold. And you talk short squeeze, the managed money is so record short, the managed money doesn't have the pain threshold that the commercial banks do, nor the deep pocketbooks, and they have to answer to their investors. And as the price starts to rise and they start to feel that pain, they're going to sell, which only will incite more covering and higher and higher and higher prices. That is at least the theory. We'll see how it plays out in real time.
Yeah, I mean, you said they're 1,500 times leveraged, the managed money on Comex silver. I mean, that's a huge leverage there. And
that's exactly what the Hunt brothers noticed in 1980. Hey, there's way more paper contracts than there are bars. And so this is a very dangerous situation where if it starts to move against them with that 1,500 times leverage, if people start to say, we want delivery, you're talking a really, really big squeeze that can happen really, really quick. Now, it hasn't yet, but it doesn't mean it's not in position to do so.
What about the Federal Reserve? How do you see their policy, and maybe the fact that they might not be able to keep raising rates for much longer, or maybe this is a different world and they're going to try to really bring everything down? Who knows? What's your feeling about that?
My feeling is that they're pussyfooting and they have no intention of being serious. Paul Volcker raised interest rates to 19.75% in 1980. That stopped the economy and also stopped inflation. The difference is we were a creditor nation, and now we're the biggest nation, debtor nation on the planet. And it's a big problem. I really think that Powell has no intention of being written about in history books for blowing up the system. He talks about getting tough on inflation, and by their own putrid measurement of 9% or 8.5%, we know that's not right. We know it's 2 or 3 times that, probably closer to 2. And he's raised the federal funds rate only to 2.25%. And that's not getting tough on inflation. He's been talking about selling up to $80 billion a month off the balance sheet. They've hardly even sold that much in 4 months or 5 months. They're not getting tough on inflation. And I don't think they have any intention of really getting tough on inflation. The market doesn't believe they're going to get tough on inflation, evidenced by the massive inversion in the yield curve, where you can buy a 1-year treasury for almost the exact same rate as a 30-year treasury. Something's wrong there. But I think this is where my premise and what I've been talking about for so long starts to take hold. And I ask people every day, do you think that they wanted to blow this up and realize that they don't want to be the ones to take the fall. So you find a villain, and that villain would be Russia and OPEC and Putin, Xi, all of the players that could potentially blow this up. And what I mean by that is was the weaponization of the dollar intended or not? Were the consequences understood beforehand or not? In other words, if you're naive enough to think that by weaponizing the dollar and kicking Russia out of SWIFT, sanctioning them and freezing their assets would not have an inverse reaction. Look at the Chinese. They've sold over 120 billion in our bonds over the last 7 months. They have their eyes set on Taiwan. Why would anyone ever trust us or the euro for that matter? Why? And I think the answer is that they wouldn't. And you know, our leaders, they may be nefarious, but can they really be that stupid to not understand that this would be the consequence? This coalition of countries all rallying against this type of Western, you know, hypocrisy, the perceived hypocrisy, and the sanctions. And so, in other words, you know, my biggest concern about everything that's happening right now would be that you see Saudi Arabia, who is now contemplating, and I believe when you say it publicly, you've already done it, joining the BRICS nations. Do you know that every one of the OPEC producing countries, all 13 of them, are on the Belt Road? 6 of the 13 OPEC producing countries are in BRICS or have applied to BRICS. The 7th, United Arab Emirates, just joined the BRICS banks. So when you're talking about OPEC as a group, all of them on the Belt Road, which is now almost 200 countries large, I believe, you know, which represents about 80% of human population, if not more. My biggest concern would be Saudi Arabia and OPEC saying, hey, thanks for the memories, guys, but we've now decided to join OPEC with our brothers and sisters here, and we're going to open up oil purchases to yuan, to ruble, to rupee, to euro, gold, and the dollar. And when that happens, bang, just like that, the dollar collapses. And when the dollar collapses, creating massive inflation here in the United States, interest rates spike. There's your villain. There's your great reset when these assets are all inversely correlated to a rise. And now Fed Chairman Powell can point to those sons of bitches who blew everything up. It wasn't us. We would never do that. We understood the fragility of raising rates too quickly, but they did it to us. The problem is that that's a lie. And we're the ones who created the inflation through printing more money in the last 3 years than in the history of this country preceding it, while paying people to stay home and be unproductive. We created this powder keg. Now, my only question to you, and I'll ask you what you think about this, because I can't figure it out. Was it intended or was it unintended? Was the intention to find a villain and to do the dirty work for the Fed? Or are they just that stupid thinking and have that much hubris that they can tell the world who can and can't use the world reserve currency and think that that's no big deal and they can get away with it? I'll let you answer that question.
Yeah, I think it's a bit of ignorance, complacency, and arrogance, a bit of all of that. They still, because you see even people in the alternative, and I won't mention names, because the last couple of days you've had this Shanghai Cooperation Organization Summit, and they said, oh, Mongolia is thinking of joining, and people laughed about that. But so it's not just our leaders, but even people who you'd think would know better. I think it's they just the dollar's been so powerful for almost 100 years that they think it's always going to be the same, and I think it's hubris. Unfortunately, the way the system has been set up is that all these kinds of actions we could have forecasted it, and I kind of have, not because I have a crystal ball, but because I've read history and know how these systems end up. And also, if you look at the French finance minister in the 60s, who said that the US has the exorbitant privilege to print money and buy things from abroad. And I think Russia, especially, and maybe other countries now, they're tired of it. They have to work hard and earn dollars to buy things, while the U.S. just prints like a quarter of the money supply in history in 2 months. And I think Putin mentioned that in St. Petersburg back in June. So yeah, it's yeah, they will though blame the Russians when it happens, just like in the 70s that when it was the US and the Vietnam War, the deficit spending, the Great Society that created the inflation for the 70s. But everyone thinks that the inflation in the 70s was caused by the Arabs because they embargoed oil, but it wasn't. So unfortunately, we never seem to learn a history and try to really find the real culprits.
And I think that's the key to all this, is that this is the rallying cry that I'm speaking about. It's being under the thumb of the West for centuries, and this is the arrogance, and so much so that you're seeing relationships being made between countries that have hated each other. Because you know the old saying, "My enemy's enemy is my friend." What I mean by that is this infrastructure that China and Russia are attempting to ignite throughout the world, even you're now seeing railways built by China between Iran and Iraq. You're now seeing Iran and Saudi Arabia attempting to mend fences. You're seeing countries that have no longer, that have for years hated each other, coalescing and rallying against a common hatred of the West. You're seeing Russia and China trying to go in and work arrangements now with Iraq, Iran, and Afghanistan, countries we've been fighting with. You can see how they are using this mentality to bring everyone into the BRICS nations, to bring everyone into the Belt Road, but they're doing it the right way. And the right way is, yes, there's a rallying cry. Yes, there's a coalition, but in the Euro, as an example, they didn't do it the right way because you had different countries moving in different directions with different expectations and different track records. Whereas, yes, you have that here, maybe even more so, but the plan is to use a pegging of commodities. So each one of these countries will pledge something, gold or silver or oil or grain or whatever it may be, in terms of backing a new system with commodities. And that is how you make it legitimate. Everyone antes up to back a new currency. And I've been saying for a long time, I truly do believe it will be on the rails of the new distributed ledger technology, 3 years old for the Chinese digital yuan, that has been successful. And I think that'll be the pegging and the backing of a new BRICS nations currency, which they just announced. And so you put it together, you have all of these countries joining together. You just heard recently that Turkey and Egypt want to join the BRICS, and Saudi Arabia wants to join the BRICS. And all of these countries, Argentina and Iran and Venezuela, you know, in and of themselves, they can't do anything to stand up to the US, but put them all together and have them commit resources to a new system. You have a much stronger economic system. You have much stronger military system, and the infrastructure that is being built all around the globe, in particular the Belt Road Initiative, which has every OPEC producing country on it, I think, and the US is you know, very conspicuously not part of, I think is setting the stage for some very, very scary times ahead. And it all points to one phrase, and that's global de-dollarization. I think that's happening. This is what's going to do the dirty work for the Fed, because I have every belief in the world to believe that Powell will not raise rates enough to blow things up. I just think, I'd call his bluff if we were at the poker table. I'll put it to you that way.
Yeah, great. Andy, thank you for being on the channel. Have you got any last words for the viewers, or maybe tell them where they can find you and what kind of service you provide at Miles Frank?
Sure. So we've been in business for 33 years. We've never had a customer complaint. We recently eclipsed 7 billion in sales, and we're one of only 27 US Mint resellers. We've done all of this without having an online presence. Our website is outdated, and we have decided to build a new one, and it's just a few weeks away from launching. It's been a long, arduous process. We had to switch developers midstream, but we're almost there. We like to think that we have the very best reputation in the United States, but we also are maybe the only major licensed and bonded precious metals company in the industry in the United States. Our home office is in the state of Minnesota, the only state in the country that regulates precious metals companies in what is a federally non-regulated industry. So on top of being what I believe is the best reputation and being accredited by the U.S. Mint, we're also licensed and bonded in the state of Minnesota. Our prices are as good or better than anyone in North America, and we would love to earn your listeners' business and trust here in North America. For any people who would like to give us a shot until our new website is built, send an email at info@milesfranklin, request an updated price sheet. I think you'll be very happy with what you see. And say, Mineko64 sent me, and I will personally make sure that we will meet or beat any price you find from a major retail company in the United States. And I think it will be a great experience. Not only will we answer your questions, but we'll provide you a personalized service, and we'd be eager to work with any of your people. So I appreciate being here. I'd love to come back on. I follow you every day. I love what you have to say. I love your take, and I'm honored to be here. So thanks for having me.
Well, thanks for coming on, and I wish you all the best, and we'll speak soon.
Look forward to that.